Welcome everyone to the Charts of the Day video for May 21st, 2019. Today we're going to take a look at streaming service stocks and see how they stack up against each other. The first one that I have up on my screen is Walt Disney, DIS. It is a new player in the business and actually already enjoyed a nice move higher based on that news, and does not look like that upside is complete yet. So overall, before we put in a more significant top on this chart, it seems like price can head up to the 155 to 165 region to complete this primary degree wave 3. In the near term, though, we may have more of a pullback in store before that further upside is seen. The recent high here completing either wave 3 of an ending diagonal shown in blue and set up for a trip back down to roughly 121, close a portion of this gap here that we saw as the wave 4 before turning back up and heading to that 155 to 165 target region as the fifth of the ending diagonal. The other option is a standard impulse, and the same 1-2 placement here for the standard impulse shown in red, but this high would have completed wave 3 of 3 with price now pulling back into wave 4 of 3. They can hold a little bit higher. Still likely to see a little bit more near-term downside, but ideally in the 127 range is where this wave 4 of 3 would hold support before filling out up towards around 146 to 150 as wave 5 of 3, and then another 4 and 5 to take you up into that 160 region overall. One that I'm sure we're all familiar with is Netflix, and there is still some bullish potential in this chart for further upside. The most immediately bullish that I see is shown in blue, where the December low did complete a fourth wave and price is filling out a possible 1-2 start to a fifth wave to the upside, and that can actually take you up, if successful, to the 650 to 700 range before that overall fifth completes. Near term, though, similar situation. It does seem like we have more of a pullback in store. Based on the size of the wave 1, standard 382 to 618 retrace target for the wave 2 pullback would be around 317 to 281. So a nice corrective 3 waves into that support can then set up the turn back up as blue wave 5 of 5. Or sorry, excuse me, blue wave 3 of 5 here. The alternative, if we begin to turn down more impulsively and take out this target support here for the blue wave 2, is a larger flat for the fourth shown in red, where the move down into the December low was only an A wave. The bounce since is wave B, and we can revisit that December low in the 225 range as wave C, potentially even dropping as low as 175 before the wider flat as wave 4 completes. Another newer name in the business is going to be Apple. This chart, however, does not look like it has any sort of clear or confident bullish setup at the moment. Instead, the bounce that we have off the January low still counts very well as corrective overall, being a B wave, and now setting up a C wave back down to at least a measured move in relation to the size of that initial drop down into the January low as wave A. So that's back at around the 130 level. We also have what looks like a nice micro 5 waves down from the high that we saw at the beginning of May here, which can easily be that wave 1 of C. So a near-term bounce as wave 2 of C can take you to 193 to 201, but is likely to then turn back down from there and head significantly lower in this wave 3 of C. So you don't have that same possible bullish potential on the Apple chart that you do on Netflix or Disney. AT&T we're going to take a look at because of Time Warner, but overall this chart is a lot different than many of those other momentum tech stocks that we were just looking at, Apple and Netflix especially, because it has been basically stuck in an overall corrective decline since the high that was hit back in 2016, just now starting to turn up off of the low that was hit in December here. So we basically need more evidence that a lasting bottom was put in place here and that would be provided by a five-wave structure to the upside off of that December low, which looks limited based on the structure so far to a leading diagonal. So near term, you can see further upside as wave C of 3 within that leading diagonal up to this 100% extension fib at 33.85. Consolidate from there in a wave 4 that should hold kind of in the 32 to 31 range, and then needs to turn back up from there as a fifth wave to fill out the full 5 waves up and complete that leading diagonal off the December low to basically confirm that a more lasting bottom has put in place. The concern otherwise, and we've shown this in our trading room, is that the entire move that we have since the 2003 low as this 3-wave structure is a corrective B wave and can set up a significant move down as this wave C into the teens, below 20 again, basically. And then finally, I wanted to take a look at Amazon, their Prime Video service, streaming service. Kind of similar to Apple here. It hasn't quite confirmed the top in place with as much conviction. This top is a B wave off the December low as we have on the Apple chart. We have a lot more evidence that the top has been struck there. On this chart, I can't completely rule out one more trip up as this wave 5 of C, an ending diagonal C wave to the 2050 region before completing the B and turning back down. But if we break below the May low here, and especially if we take out 1750, that's going to be a pretty strong indication that the B wave has completed and price is starting a similar C wave back down to the downside. So overall, it does look like from the bullish side, the Disney chart and the Netflix chart are the best positioned for further upside. AT&T, different pattern there. We'll see if we can start to get confirmation of a more lasting bottom. Apple and Amazon see more setup for some substantial downside from here. That's all I had for you guys today. See you again next time.